Welcome back, everyone. Let's just dive right into day 11 of your crypto trader journey. Today, we're tackling a big one, momentum. If you've ever stared at a chart and felt like the price action was just, chaotic noise, you really need a way to measure the actual force behind those moves. And that is exactly why we're going to look right under the hood of a totally classic, incredibly powerful indicator, the MACD. In this explainer, we're stripping away all that complex trading jargon and breaking this tool down into clear, highly visual, and actually actionable steps.
Here's our game plan for today. First up, we've got the anatomy of MACD. Next, we'll look at crossovers and divergence, and finally, we will wrap up with market structure practical application.
All right, part 1. The anatomy of MACD. We are isolating the visual pillars of this momentum engine. So when you first load up this indicator, honestly, the barrage of lines and bars can feel a bit overwhelming. To avoid any cognitive overload here, let's open up the hood and isolate just the MACD line. Think of this as the primary heartbeat of the momentum you're trying to track. Mathematically, it's calculated by simply subtracting the 26-period exponential moving average from the 12-period EMA. Basically, it strips away all that daily market noise to show you the core direction the asset is actually moving. It's the absolute anchor of the entire indicator. But the MACD line doesn't just fly solo. Enter the signal line. This is its vital counterpart. It's typically a 9-period EMA of the MACD line itself. Think of it as a trailing shadow, designed specifically to interact directly with our primary tracking element. Without this signal line, the MACD line is just sort of a lonely trajectory on your screen. But with it, you get this dynamic relationship that actually triggers our trade observations.
And finally, rounding out our anatomy lesson, we have the histogram. Now, the absolutely crucial thing to understand here is that this acts as the visual pulse of the indicator. It literally visually represents the exact relationship, specifically the physical distance, between the MACD line and the signal line that we just talked about. So when those two lines pull further apart, the histogram grows larger. When they squeeze closer together, it shrinks right back down to zero. It's just a brilliant, immediate visual cheat code. Instead of forcing your eyes to squint and measure tiny gaps between two moving lines, the histogram tells you exactly how much momentum is building or fading in a single glance.
Moving into part 2, crossovers and divergence, where we watch this engine in motion.
Okay, now that we know the static pieces, let's see what happens when they actually interact. On one hand, we've got crossovers. This is simply when our MACD and signal lines physically cross paths, acting as an active, right-now alert that momentum is shifting. But on the other side, we have divergence. And honestly, this is arguably way more fascinating. It's essentially a tug-of-war where the price action and the momentum are fundamentally disagreeing. Let's say Bitcoin pushes to a new higher high in price, but the MACD actually sinks to a lower high. They are completely disagreeing with each other. Recognizing this underlying divergence, well, that's what separates casual chart watchers from highly effective traders.
Which brings us to part 3, market structure, practical application. Let's bring these abstract terms back to reality.
Because let's be real, any tool is completely useless in a vacuum. Your practical mandate here comes down to 2 crucial steps. Step 1, identify your MACD signals. Look for those crossovers, spot that divergence, and then step 2, take those signals and compare them directly with the actual market structure on your charts. Never, ever look at the MACD in pure isolation. You always have to ground the mathematical momentum of the indicator within the structural reality of the market itself. Remember, the indicator is just the map. The market structure is the actual terrain you're walking on. And that brings us to our final, most critical thought for today. As you head back to your trading screens to put this into practice, I want you to ask yourself, are your MACD signals actually aligning with the market structure, or is a divergence hiding right there in plain sight? When price structure and momentum agree, great, you have alignment. But when they disagree, man, that hidden divergence might just be the absolute most profitable story your chart is trying to tell you. So what is your chart trying to tell you right now? Keep your eyes open, stay focused, and I will catch you in our next explainer.